All righty. Good morning, good afternoon, everybody. Welcome to another edition of Tristan's the Man. My name is Mike
Oh,
Larino. My name is
wrong,
Mike
wrong weapon.
Larino.
I have to step out. Sorry.
My name is Mike Larino. I am the founder and CEO of AssumeList, AssumeList.com, the nation's largest assumable search platform. And today we're going to be discussing a really, really great, fascinating topic, how to do lead generation and explode your business using assumable mortgages. Joining me today is our head of training, Nora Simpson. You may have remembered Nora from our last webinar here at Lab Code Agents. She is a phenomenal business coach, real estate expert. She has trained over 200 agents around the country to help grow their businesses. She's trained teams and individuals. She is phenomenal. She has pioneered a technique called the neuroscience of sales, which is the psychology of real estate sales. I'm very much a fan. I'm very lucky to have her on our team. I'm going to have her introduce herself and open us up today, and then we'll hand it back over to Tristan for our initial round of questions.
Well,
Go ahead, Nora.
I'm so excited, Mike, and thank you so much. Yes, it is such an honor and a privilege to teach the neuroscience of sales to real estate agents across the country. I've worked in the trenches, in the cubicles, and the Zoom rooms of real estate teams across the country, 200 different teams across all 50 states. Plus, I'm very blessed to be invited to these real estate conferences, where you talk to thousands of people. It's lots of fun. Neuroscience of sales helps us really understand how to create that customer journey while we're building our businesses with integrity. A lot of my clients see a doubling of revenue within 3 to 6 months. And I have fallen in love with AssumeList. I think AssumeList is the most exciting new opportunity for real estate agents and leaders across our country. I think we are looking at an assumption boom for 2025 that is going to turbocharge our real estate businesses for every single person who is committed to getting up into the front of this boom. And here's the way a boom works. You can be at the front, you can be at the middle, or you can be running like heck trying to catch up at the end. And the folks at the front are going to have an incredible experience in March to June of 2025. And we're just so excited to spread the word and have all of you benefit from this assumption boom, buyers, sellers, agents from every direction. And AssumeList is here to support you. So I'm super excited to be here with our brilliant genius CEO and founder, Mike, and the amazing Tristan from Lab Code Agents. So Tristan, what have you got for us today?
Well, listen, I'm always curious about what's next, and I think you got it right. We're looking at a real estate market that a lot of economists and companies are saying is going to be very similar to 2024, and that means that we're still going to hover around the 4 million sales a year. Probably a little bit more, 4.2, 4.3, who knows? But not even close to the 6 million that we encountered a few years ago, or even the average 5 million that we were more used to. And that means that we're going to have to get more creative to be able to put those buyers that are struggling, where now the average first-time home buyer is 38. That's a shock to me. Like, people are delaying buying homes because they just can't afford it, not because they don't want to. And I think this allows us as real estate agents to be able to help people, like truly help them. And part of that, a big part of that, because I've been watching the growth with Mike here, is Mike and Bethany introduced me to assumable loans, believe it or not. I had no idea. My questions were like, what, no, what, how? And part of that is the language that is involved in teaching and connecting this product to other people. And so I'm excited, Nora, to see where we start with this with you. Just where do you take people through? What do you take people through in regards to showing them how this all works?
Absolutely. Well, first and foremost, I love to help people understand that with the assumption boom, we're looking at a win-win situation. And I've worked with a lot of agents, and every single real estate agent I've ever met loves helping people. It's one of my favorite things about real estate agents, right? They love seeing that there are ways that everyone can make money and everyone can do well for themselves. When we have, honorable, kind, loving folks all kind of coming to the table, and assumptions are just this incredible opportunity to have everybody win, to have everybody benefit. So I think it really appeals to the deepest joy of what it is to be a real estate agent and why we love showing up for these real estate businesses, because I've never met a real estate agent who doesn't love seeing people be really happy with how they made money selling their home and buying a new one, or how they got the home they were dreaming of, and were able to settle in and really get excited about home ownership and nesting and all that fun stuff. So the thing about assumptions, as you have probably learned by now, since you've been hanging out with Mike and Bethany, is that buyers get access to these time machine mortgage interest rates, right? They get access to 2, 3, and 4% interest rates at a time when most first-time primary mortgages are going to look like 6, 7, and 8% interest. So that means that often people are saving $500, $1,000, or even $2,000 a month on their mortgage payments for 10, 20, 25 years. And sellers, when they have agents who understand and are educated about how to put that assumable mortgage to work for them, sellers see more buyer interest by a mile when they have these assumable mortgages ready to be assumed, and they often get higher prices. So everybody wins. So that's my favorite part of the neuroscience of sales and how it connects with all of this, because neuroscience is really the study of the brain, and it turns out brains are tribal and brains love win-win more than anything.
That's true. That's very true. We're the average rate. So I was thinking the average rate that all of these different companies are saying we're going to be at, it's going to probably be somewhere in the low mid 6s, but everyone agrees that it's going to be going up and down, kind of like what's been happening for the last 4 months, like boom, boom, right? And that means that we're not going to reach the 4s and the 3s, which makes AssumeList and Assumable loans more valuable, right? So I love the word you use, the time machine rates. Is that what you called it? Time machine?
I did. It's not
Really
my phrase. I totally stole it from one of our awesome subscribers that's doing so much business right now out in San Diego. And Mike and I, when we heard him tell us that AssumeList was a time machine for him and his clients, we were like, oh, we're totally stealing
Brilliant.
that.
What a great way to explain it to clients. It's a very good way. I love that.
So
Yeah.
Tristan, you brought up a really important point, and that is that if you read any data from any reputable economist or mortgage interest expert, banking institution, everything that I'm reading suggests that for the year 2025, we can basically say that interest rates are largely going to stay where they are. And this slide you have up on the screen shows that, for 2025, if you look at the forecast over, say, the next 12 months, the average interest rate forecasted for the year 2025 is 6.34%. This is spot on with everything that I'm reading. And of course, there's little nuances between different, banks and different lending institutions. The National Association of Realtors, of course, wants to be, they want to be the little bit, the most modest and lowest, because they want to incentivize home buyership. But for the most part, 6.25, somewhere between 6 and 6.5. Let's just say it's between 6 and 6.5% is generally what we can expect to see for the foreseeable future. Now, this is no surprise. Anybody who has been in the real estate industry for 10, 15, 20 years, or if you look at just the historic trend of interest rates over the last 30 years, you will see the average interest rate over the last 30 years in the United States has averaged in the range between 6 and 6.5%. So we are at par. We are at the rate today is basically what the rate has been over the last 30 years. We had a minor, that dip during the COVID era where we saw those rates drop to in the 2s and the 3s. That is considered an anomaly. the expectation is they will stay where they are. So what does that mean? If we can all just wrap our heads around the idea that rates are largely going to stay where they are, with some minor fluctuations, maybe a quarter point here or quarter point there, then what does that mean to the average home buyer and the home seller? Well, if you're a home owner and you need to move, you are likely looking at the interest rate you currently have in your house, that whether you bought the home a few years ago, or maybe you bought it many years ago and have refinanced it because when rates dropped, you took advantage of that. But nonetheless, the vast majority of homeowners, like something like 80 some odd percent right now, have an interest rate in the threes or better across the country who have owned a home for at least the last 2 years. So they are really kind of in this predicament where if they have to move for a job, or maybe they're have new kids, more kids, and they need to upsize, or maybe they're downsizing, many of those homeowners don't want to sell, or they don't want to give up their existing mortgage to purchase a home with a 6.5% mortgage, basically costing them significantly more just in that, the interest rate. So AssumeList gives those sellers an opportunity, as does all buyers an opportunity, to find homes that they can move to. We hear this term rate lock, right? A lot of homeowners are in this rate lock. They can't give up their existing mortgage because they can't afford the new home that they want to buy. Well, this helps solve that problem. And so when you ask, well, what's new? What are we doing about this? Or what are we doing with this information? And one of the things that Nora and I have been working on for like the last month and a half is, yes, we built an amazing search platform. AssumeList is phenomenal. It is built, the slogan I'm using now, it is built by agents for agents. When I say by agents, not just me. Yes, I'm a real estate agent. I've been doing real estate for over 15 years now. But it is built by the subscribers who participate in this, and we are effectively crowdsourcing the capabilities. I have emails daily from different agents around the country. Hey, Mike, be really cool if it did this, or really cool if it did that. So for example, just yesterday, I had an agent who is a subscriber who works with live investors. Yes, you can assume a loan as an investment property. No, you do not have to be a veteran to purchase a VA loan or assume a VA loan. So this agent reached out to me and said, hey, Mike, be really great if I could see cap rates and I could assess assumable properties based on their cap rate. I'm like, wow, I never thought about that. Let me add that in. So we are going to, by the end of this week, we will now be displaying cap rates in our assumable listings as a means to help those agents who work with investors. And that's really one of the most important factor, right, with investors when they're assessing what properties makes financial sense to acquire. So things are moving very quickly. We are expanding. We're continuing to expand. We're getting ready to launch into another state. We're in 20 states today. We'll be in 21 states by the end of the year. We're adding Minnesota. And we just launched today in Sacramento. So Northern California. We just added the Metro List MLS. We're really excited about that. We just got approved. And it's not even in the map yet. In fact, we just got the approval today. So you won't see those locations on the California map just quite yet. All this to say is what we've realized, Tristan, right? And this is kind of the punchline. What we've realized is, yes, we have an amazing search platform, but the agents that subscribe that are using this are really, really interested in learning how to use this tool to grow their business. And so what we've done, what Nora and I have worked on, is building out training materials, documents, scripts, fact sheets, articles, videos, and we are making it available to all of our subscribers. We're giving them the language on how to have those conversations with the listing agents, who will almost immediately say, oh, this property is not assumable. And I'll have to respond and saying, well, it has a VA loan. Did they refinance it into a conventional? And the listing agent will say, no, it's still a VA. And I'm like, okay, so it is assumable. And then, we constantly kind of go back and forth, and I have to have these conversations all the time with listing agents, and the subscribers who use the AssumeList platform need some tools and need some scripts to have those conversations. How do you overcome the listing agents who really don't have any knowledge about assumptions, and you still want to put an offer in to assume that loan? We are helping solve that problem. We have built fact sheets and a myth-busting one-page slick sheet that really helps answer the 5 most common myths about assumptions. And we give all this material to our subscribers to educate them and really give them the language and just the knowledge to really have those conversations with not only other agents, but also with their clients, to help their clients along this journey.
Where
Tristan,
do I find that? Where do I find that sheet?
so I saw you just screen share the dashboard. So by the end of this week or early next week, there will be a new module added to the dashboard where all of these documents will be made available to every single agent subscriber. And so they will have you and every other subscriber who, once they log into their account, they will be immediately brought to the dashboard. The dashboard will have all of this documents, all this material available, and you can download it, share it. The scripts are available. And then, by all means, if there's anything else that anybody would need, we're more than happy to produce that.
All right, quick question. Oh, go ahead, Nora.
Well, I was just gonna say, Tristan, so first, Young, could you go ahead and post the link so that Sam can see the link to becoming a subscriber, because he just asked for it. And secondly, Tristan, when you're done asking your question, I want to say something about numbers and what these fact sheets, like how we came up with the realization that we needed these fact sheets. But go ahead, Tristan.
Perfect. Yeah, actually, when Mike said fact sheets, I was like, the first thing I thought of was I will go on probably Instagram or TikTok and just say, hey, do you want the fact sheet? Just, message me, or I'll connect it to ManyChat and put like, hey, put fact sheet chat. And then it'll just automatically send it. That's value. This is stuff I could use on social media to attract clients. I wanted to ask either of you, if I'm looking at this, so Thousand Oaks, I'm out of the Malibu Thousand Oaks area, and I'm looking at this. Explain this stuff to me right here that I'm looking at so that we can understand the opportunity. Just so for people that are watching it.
So first and foremost, Thousand Oaks is not like most other markets. So we see a home purchased or home listed for sale at 1.75 million, which I assume is an average priced home in the Thousand Oaks, California market. So let's just go through what we actually see. And this is representative of every property that we would see. So right below the list price, even before that. So in the red box above, it says it's an active status. So every market that we have access to, we list properties. We have a direct connection to the MLS in that respective market. So we know when homes come up for sale. We know when they change from active to under contract or pending, or if the deals falls through, it comes back to active. So we always, and we update this on an hourly basis. So we always have an accurate representation of listings for each assumable home in that market. This particular home looks like it's been on the market for 12 days. We have the address below that, the list price. I'm going to come back to where it says 1.3 down in just a second. Below the list price, it shows the loan type. And this has a VA mortgage. And underneath that, it lists the estimated interest rate, about 2.8% on this particular mortgage, which is a fantastic interest rate.
That's crazy good, man.
Great, crazy good. Now, I'll throw this little fact out. I've said this before. I think others on this call may appreciate this. For every 1% change in interest rate equates to approximately a 10% change in the mortgage payment. So between, say, a 6.5% mortgage to a 2.5% mortgage, right? 4 points, 4 percentages, that equates to roughly a 40% reduction in mortgage payment. So effectively what we're saying is from a 6.5 rate to maybe a 2.5 or 2.75, we're almost cutting the mortgage in half. I mean, that's literally what we're talking about here. That's the power of what assumptions offer. Below the interest rate, it says the remaining mortgage term. And so when a buyer assumes an existing mortgage, it doesn't matter whether it's VA or FHA, they are not purchasing a home with a 30-year mortgage. They are purchasing a home with whatever the remaining time is on that mortgage. So in this case, if someone were to assume this mortgage, they would only have a 26 years and 4 months left on that mortgage payment, or on the mortgage until the loan is paid off. Now, there's a kind of a double benefit built in here. Not only is the interest rate very favorable, but the first 4 years of interest has already been paid. And anybody who's familiar with an amortization schedule knows that the vast majority of the first few mortgage payments, like 98, 99% of it goes to interest. And then over time, right, a greater percentage of the mortgage payment, even though it's fixed, goes towards principal and less towards interest. So the buyer who would assume this mortgage is benefiting from the fact that most of the interest has already been paid. And now those mortgage payments going forward, a greater percentage of that mortgage payment will be paid towards principal. Off to the right, loan balance. This is where it really gets cool. So not only do we know the interest rate, but we also know the loan balance. And that loan balance on that mortgage is always accurate. I would say always 99% of the time it's accurate to within 1% of the actual existing loan balance. Now remember, the exact loan balance is only known by the servicer and the homeowner when they log onto their account. So that actually is not something that we pull through public records or anything like that. We recreate that in-house. Our software takes the date that the home was bought, we take the interest rate, and we take the original loan amount that was borrowed, and then we run an internal amortization schedule and deduct the monthly payments like any other banker would, and that's how we come up with the current loan balance. So because we know the loan balance, and we know, of course, what the home is being sold for, that allows us to calculate the down payment requirement. And in this particular home, it has a fairly substantial down payment. I would suspect that this homeowner probably bought this home many years ago and is sitting on a lot of equity, I would suspect. The mortgage payment, therefore, is very, very low, $2,100 a month. Unbelievable mortgage payment for a $1.7 million home, predicated on the fact that, as we know, they probably bought it many years ago, and their mortgage payment was originally based on their current loan balance, which they have since paid down. But nonetheless, a buyer that would be interested in assuming they had the cash, would be able to purchase this $1.7 million home, and they would have roughly a $2,200 mortgage payment.
All right.
Fairly powerful. Now, yeah, go ahead.
Give me the second piece to this. If I need to get a loan for part of this, how does that
Let's
work?
go. So scroll your screen to the right, Tristan. Just pan it over, and you'll see where it down there is as a calculator right there. There we go. See where it says 2.81? So that correlates to the mortgage payment of the current interest, or the current loan balance. And then below that, it says, and we can hit the pencil button. So 7.26 is basically what, yeah. So hit that pencil button and change that to what you think the current interest rate is for maybe Thousand Oaks if you can get a mortgage right now, 6.25 or something like that, 6.5, sure. Now hit update. So if you know, basically what this does is this will run a calculation for what the savings would be, assuming this home versus taking out a new mortgage. And it's going to default apples to apples. So you would have to come up with that 1.3 million down to do the assumption. It's also assuming that's what you put down if you were to take out a new mortgage. But if you only wanted to do, say, 20% down, so click on 20% down, you can now borrow the difference. And so it says 350,000 is 20% down. And then you would, the second mortgage would be 900,000, which is probably not very good for this house because that's a massive down payment. So let's just say this is really a hard one to assume. It will basically, what this does is automatically calculates a blended interest rate based on the assuming a first mortgage and adding a second mortgage, and it will weight that out, right? Depending on the,
I love this.
Yep. So, and it will create a blended interest rate up top. So
And
if
hey,
you
Mike,
needed a second mortgage, this will tell you what the combined interest rate and mortgage payment would be.
Yeah, I just want to jump in here. Tristan, if you click on 10%, which is what I did when I was going onto my own AssumeList account, go ahead and click on 10%. Do you see it? Yeah, right there, 10%. So for folks in places where they're looking at $1.7 million homes, right? This is a very different conversation than when we're looking at, let's say, the suburbs of San Diego or San Antonio, Texas, right? But what's interesting about this is that even for a home like this home in Thousand Oaks, which was, I was doing the research on the back end on my account. It was purchased in 2012. It was refinanced in, I think, 2021. Even for a home with $400,000 left on the VA mortgage, the blended rate still presents a lot of savings over the life of the loan to whoever is interested in buying this $1.7 million home. So it's not the same, it's not the same like story as like a first-time home buyer who's going to be able to assume a $350,000 home with an FHA rate of 3.4% and save 500 or $1,000 a month on their starter home mortgage payment. This is a very different financial story to tell. It's still a massive savings for the buyer who's looking at this home and excited about doing the assumption.
And let me
Yeah.
I'll just do this, Tristan. This is a home I just found in, up in outside the Sacramento area, California. And this would say a representative of a typical home, maybe $700,000 single family home. It's a VA loan with a, great 2.77% interest rate, very similar to what you just had up on your screen. Usually when you have a down payment that's, well in excess of 50% to do the assumption, it's very challenging to do an assumption, one that requires a lot of money. Second mortgages don't work when the second mortgage loan balance has to be massive, because remember, the interest rate on a second mortgage is going to be high. We do work with a lender partner that specializes in second mortgages. I think, Tristan, you and I talked about that in the past. So that's a great way to cover the down payment if a buyer doesn't have the cash needed. But this is kind of much more traditional of what a typical buyer around the country might see. 2.77% interest rate. It'll give you the monthly mortgage payment for that relative to a new loan. And in this particular case, a buyer would save about $800 a month, or about $300,000 over the remaining loan term if they were to do this assumption. So that's pretty powerful, right? That's a pretty strong argument to say, well, this makes perfect sense if should that buyer have the cash. Now let's just say they don't have the 196,000 in this case, but they have 20%. So if they did 20% down, they could get a blended interest rate. So they would come up with 20% on this, which would be 132,000, and then they would borrow the rest through a second mortgage. In this case, about 64,000, and the software automatically calculates this for you, and it automatically creates a blended interest rate. We built in, based on our second mortgage lender partner, we reverse engineered the interest rates and the terms associated with this purchase HELOC, which is what it is. That purchase HELOC is a home equity line of credit where the buyer can pull equity out of the home they're purchasing at settlement. And this will create a blended interest rate of a primary mortgage plus the secondary mortgage, where the buyer can still do an assumption and not have to come up with the full down payment. In this case, just 20%. Or we can hit the 10% button. And of course, the bigger second mortgage, it means that the blended rate will adjust ever so slightly upward. But now it runs in real time that calculation of what that combined first and second mortgage payment is relative to a similarly 10% down new mortgage at 6.5%. And it will now tell you what the monthly savings are from a first and second mortgage combined assumption compared to a new loan. And so in this case, it still makes sense to do the assumption, even if you only have 10% down and needed to finance the rest. Really, really powerful for buyers to be able to see this and run through this calculations to see if it makes sense for them.
So Mike, we promised everybody that we would help them understand a bunch of cool marketing tools, but let's actually, I want to do a quick recap of our big picture stuff that we've been saying today. Okay. So first and foremost, we've been talking about the win-win of it all. And one of the things that I've been wanting, one tiny little jewel I've wanted to share with everyone is that 3 months ago, when Mike and I were presenting across the country to team after team after team, and they were all going, oh my God, AssumeList is so cool. We want this AssumeList thing to be our secret weapon. That's what they kept saying. We want it to be our secret weapon. Don't tell anybody else in the market where we work, okay? Because we just want it for us. And we were like, well, they are gonna subscribe. Yeah, okay, sure. 2 weeks later, it only took 2 weeks. Every single team would call us and go, just kidding. Nobody knows what an assumption is. What do you have any information about? Right. And so that's what actually was the trigger for us to go, oh, we need to make all these fact sheets and make it really easy to spread the word. Right. So now when people say, oh my God, don't tell anyone I know. Okay. I want it all for me. We say, actually, the boom happens because we're all learning together. And you will benefit the most because you're at the front of that boom and you're leading the education and you're leading the knowledge across your marketplace. And honestly, don't think of this assumption game as a game of getting over on other people. Think of it as a game of we're all going to win together. That's the magic, right? Once we have that, once we're all winning together, here's what's possible, right? And by the way, in the name of we're all winning together, that's why Mike and I have worked so closely with our second mortgage lender partner to make sure that we're supporting our agent subscribers, supporting our buyer subscribers in looking at and running the numbers for that second mortgage financing. Because the God's honest truth is most people have a really hard time assuming an attractive, assumable mortgage without a little extra help, right? And that's not a problem because it'll still be a really competitive blended rate. So given all that, Mike, why don't you share your screen and let's show everybody how we've built AssumeList to be a platform not just for finding assumable mortgages, but for educating and attracting both buyers and sellers in ways that grow your business.
Let's do it, Nora. I wanted to offer up, I see some folks who they put their hands in the air to ask questions. I would say, please just post your questions in the chat and we will go through them and answer them in real time as best as we can. So if you have any questions, please just drop them in the chat. We'll go through them. And in the meantime, I'm going to transition. I really want to show this capability. A lot of agents ask, how can I use AssumeList to generate leads? And so one of the easiest ways to do this, the absolute easiest way to do this, is to promote a property in your home market, in your local area that has a really great interest rate, maybe has a really low down payment requirement, and it's just a fantastic property that's listed for sale that you think you can find a buyer for. And so I just literally randomly found a home here. It's called, or it's in Dallas, Texas. It's got an FHA loan with a 2.65% interest rate, a modest down payment, about $90,000. And we're gonna just say, for example, that this property is a great home that you think that a lot of people would be interested in. Your parameters may be specific, depending on where you live and the price point. But let's just go with it for the purposes of this example. What we're going to do is, and this feature is available to anybody who's an agent subscriber, is you create a shared link, and there's a button on the screen that says share, and we're going to create a shared link. And this shared link is going to be unique to this agent account. When you create your account, you're going to set up your profile with your photo and your contact information so that whenever you share a property, and actually I can show it real quick before I demonstrate how to generate leads from it. But that link that I just created, I'm going to open that up into a new browser window. And this would be an example of perhaps you wanted to share this with a client and you would include this in an email to a client. And when they open that up, I'm currently logged into Bethany's account. This is my wife's account here. And it shows her name at the top of the page, her team name, her logo, and then of course her contact information, her photo, email address, and phone number. And so this is now used as a kind of a branded landing page or this experience that you now are sharing with your respective clients. So when they see properties come from you, you now are getting this credit and demonstrating to them, yes, I am an expert in assumable mortgages. Let me share you some listings. And when you send those listings to them, it is coming across with your branded experience, which for many people, this is the only place that they've ever been able to see this or get access to this information. So it really makes you look good in the eyes of the clients that you're working with, putting this all together and making this available to them. Let's take that same link. Now I'm going to show you, you can take this one step further and now generate leads off of it. So you're going to go to your Facebook and you're going to, click on the what's on your mind to create a new post. And what we're going to do is we're going to just paste that link that we just created in the AssumeList platform. And we're going to paste that link in a post. This is just a Facebook post. You could drop this in a private forum. You could drop this in your public feed, wherever you want to create a post to generate interest. Absolutely, this works. Once we created that post, and you'll see the display of the property listed here, as well as the address and the price, bedrooms and bathrooms, you can delete that URL, and now you can type in whatever you want. Amazing, right? FHA, assumable home with 2.75% interest rate. Check it out, right? And then you can add some hashtags, assumable mortgage, whatever hashtags you think would grab attention. Home buyer hashtag 7.5 million keyword, track to that keyword. I'm not going to post this to the general public because I don't think people want me to advertise a home in Dallas. So I'm just going to post it directly on my own private feed here. I'm going to hit post. And what happens is once you post this to your feed or to a Facebook group, it is now available for the world to see, right? hundreds, if not thousands of people may potentially see this particular listing that you just posted. What's really, really cool is whenever somebody clicks on that link, right, they see your text, they see the hashtags, perhaps if you added any, you can include any information you want. They're going to click on that link or the photo. And when they open that up, it is now opened up as a branded experience for you. Now, I'm currently logged in to my account here, but for those that click on that aren't a AssumeList subscriber, which obviously everybody on Facebook who are following you probably are not an AssumeList subscriber, especially if they're home buyers, there will be a red button at the top that says Contact Agent, and that contact agent is contacting you. And what that will do is that will point them to a form on the page, and that form will be pre-populated with this address, and all they have to do is hit submit. And that form will be their name, email address, phone number will be sent directly to you as a free lead. So anybody who...
Can you
go
put the
ahead,
link
Nora.
into an incognito window so that we can see it with the contact agent button?
I will have to reshare my screen. Let's see. I can do that. I'll reshare my screen.
So while Mike is doing that, I want to talk a little bit more about how our current subscriber base is using this to massive effect. So when you share these sorts of listings, first and foremost, everyone's going to see your photo, your name, your phone number, and your email address next to this listing with all of its really cool information. So they see the cool thing on Facebook, and then they go, wow, 2.65%? Is that even possible? They click on it, and they don't just click on the 2.65%. They see your name. They see that beautiful photograph of you that you've uploaded for your profile. They see how to contact you, your phone number, your email, and show them what they see, Mike. What's that red button there?
So when they'll see this contact agent, and this is actually contacting you. It's not contacting the listing agent. This may or may not be your listing, but they will click that contact agent, and it will say contact Bethany or whatever your first name is. The software will say they're contacting you, contacting Nora, contact Mike about this property. And since I'm in an incognito window, it won't auto-populate with name and phone number or email address. But if they're in a Chrome browser and they're logged into their Google account, it will automatically populate as much information as available from their Google profile. And it will also, by default, always include the address that they're inquiring in. And all they would need to do is hit the submit button, and it will send that lead inquiry directly back to you, and only you, as a free lead that you just generated through a Facebook post. And potentially this person is interested in Assumable homes or this particular property, or just any property with a low interest rate. And that's really a way to grab attention by just showing, by spending 2 seconds of your time to promote or post a photo or a link of a Assumable property wherever you want to post it to, private feed, public feed, etc.
And I should also just say, Mike, a lot of our agents are engaged in a kind of an educational leadership right now, not just of other agents, but of buyers and sellers. For instance, did you guys know that 10% of listings in most metro areas are Assumable listings, and yet fewer than 5 to 10% of those Assumable listings are advertised as Assumable? So there's many, many, many more opportunities for assumptions than most people realize. And it's because there's such a gap in knowledge among everyone, buyers, sellers, agents, everyone. And that's why our current subscriber agents are not just educating fellow agents, not just educating their listing, their sellers, and we'll talk about how they're using AssumeList to generate listings in just a second. They're also educating their potential buyers. So we have agents that are making videos about assumptions, using our assumption fact sheets, using our myth busting fact sheets, sometimes they're inviting us to be on the videos, right? Like I have one agent who's already been recording me on Zoom with her to help her spread the word across all of her social media audiences, etc. So we are supporting our agents in every way around educating the general public as well as the real estate professional population so that this Assumable mortgage opportunity is available to as many people as possible. And we have run the numbers, and you can actually see on the dashboard on AssumeList that there are 26,000 Assumable properties across our assumable listings across the areas that we cover, we believe that that number will be 75,000 assumable properties from March to June of 2025. So get educated and start spreading the word today so that as many people as possible can benefit, because this is such a win-win. It's a win-win for buyers, for sellers, and agents. Mike, did you want to say something else before I get into how our subscribers are using AssumeList to generate listings?
Yeah, I mean, I think you're hitting it right on the nail on the head here, Nora. I certainly wanted to ensure that we have some time to answer any questions. So if you have any questions, please ask them in the chat. We'll definitely get to them. I can do a screen share and show how the off-market search, because that's another really powerful way to do, to identify new inventory, perhaps even, come up with listings, right? Generate listings with using AssumeList.
Why don't you show the off market, and I'll talk about how our existing subscriber base is using the off market search capacity. And I want to be clear, because AssumeList was built by agents for agents, thinking about what agents require in our businesses in order to be growing our businesses every day. We are the only assumable database, assumable mortgage database, assumable property database that offers off-market search. And we are so proud of that because off-market search is so essential for growing your real estate business. So of course, the simple way to use off-market search is to sit down with a buyer who's very interested in assumable mortgages. Maybe they've seen a video you made on your Facebook about them after subscribing, right? And to say, would you like me to reach out to owners of properties with assumable mortgages that look attractive to you, and make them offers on your behalf? So that's one way to create actual off-market deals, which is really attractive for everyone. Now, another way to create more deals, to drive more deal flow, is to actually use our off-market search capacity to do very targeted strategic mailings and other sorts of marketing campaigns that allow our subscriber base to let folks know across the area that they operate in that those people are sitting on a gold mine, right? And so you might have 10,000 or 20,000, properties with assumable mortgages in your area. If you strategically look at, what are the ones in the, in the specific neighborhood or the specific,
Let me run a sample example here, Nora, real quick. So I just randomly, again, we'll just go back to California. I typed in San Diego, and in San Diego right now, there's 153 homes listed with an assumable mortgage that are on the MLS, listed for sale. Some of them may be coming soon. Some of them are active. Some of them could be sold. But for the most part, these are homes that are listed for sale. And there's about 153 of them today. What we have the option for is, and only agent accounts have this ability, is to search off market. And so what we mean by off market, these are homes, every single home, and we'll just go back to San Diego, every single home in San Diego or any market that you want, you can just type in whatever location or area that you're interested in, with an assumable mortgage, all with an interest rate of less than 5%. We only display homes with an interest rate of less than 5%, are now at your fingertips. So there are over 19,000 homes just with a San Diego address that are searchable in AssumeList, all with an assumable mortgage, all with an interest rate of less than 5%, and all available to you to kind of sort through. And you can set your filters, bedrooms, bathrooms, right? Really, really powerful stuff here. What's really cool is the down payment option. You can still set a down payment filter for off-market properties based on we have an AVM automated valuation tool that automatically calculates current market value, assessed value, and then based on that assessed value, we are using that relative to the loan balance to come up with a relative down payment requirement for an off-market property. So pretty cool. Now you will notice that some homes have photos, some homes do not. When you see photos, just know that these properties are homes, the photos are from the previous listing. So I'll just open one up, an example, and give you an idea. You'll notice it says last sold price here, right? This is an off-market property. This home is not in the MLS. It's not listed for sale, but you have access to it. So for example, this particular homeowner has a VA rate with a 2.73% interest rate. It's about $1 million. Let's see what it's worth. If we scroll down here, it's worth somewhere about 900 to 950. There's a range that Zillow offers us. And we can put an offer in on this home, and we can contact the homeowner. We can hit this red button here that says view owner contact information. And I'm not going to do it on this page because I don't want this individual's personal email address and cell phone number being broadcast to the world, but it will display a skip trace query relevant to or providing you with that homeowner's contact information to the extent that it is available, their cell phone number, email address, or addresses, and you can now reach out to that homeowner with an inquiry saying, hey, I have a buyer interested in your property. Would you be okay, or would you be willing to entertain an offer if I were to submit an offer on behalf of a client? So that's a really powerful way to generate more inventory from homes that do not exist on the market. But you can really funnel these down and say, find a community, find a home, find a specific street that you have a buyer that wants to buy in, and you can start going through these properties and looking at all the mortgage information. Some of them won't have photos, of course, because they're not listed for sale, and the MLS doesn't have any data on them. But even if it has no photos, we, of course, still provide you, the agent, with all the mortgage data. So everything about the interest rate, the loan balance, the loan type, all of the mortgage payment, all that is still here and available for you to make a judgment call, whether this is a relevant property for a particular client that you're working with. Nora, go ahead. Did I miss anything
no, I was just
specific to
gonna
this?
say, so when you're doing these mailings, like let's say that you've got about 200 listings in your area or 200 properties in your area that you've identified as really attractive, you can write letters to these folks, and we are supporting our current agents because we don't just have our fact sheets and our videos, we also have live subscriber trainings every single week. And so we are supporting our subscriber agents in composing these letters and including printouts of our assumption fact sheets and including printouts of our myth busting fact sheets and all of that, so that they are educating the owners of these properties and saying, by any chance, if you are thinking about moving or if you are thinking about selling, please be sure to contact me so that I can help you understand that because you have an assumable mortgage, which you may never have heard of until this moment, you are capable of generating more buyer interest and potentially getting a much higher price if you work with an agent who knows a lot about how to use assumable mortgages to your advantage in the marketplace as a listing agent. And so we are so excited to support our agents in not just, making really powerful dreams come true for home buyers who feel, locked out of the current market rates, but also supporting folks who want to sell their homes, who have assumable listings, who have assumable properties, who don't even know it. That's the crazy thing. Most people who have these assumable mortgages, they don't even know that this is something that will strengthen their relative position in the marketplace and lead to more buyer interest and potentially a higher price.
Awesome. We're winding down here. I know we're over our time here. We'll just close out with just a couple kind of summarizing points. One, what AssumeList really offers you as an agent is really the opportunity to go out and contact every single person in your database, right? The key to an assumable mortgage is not that you have to necessarily close a deal with an assumable loan with a buyer or a seller, right? The purpose of it is it gives you an opportunity, a very easy way to call everybody in your database and says, I've got access to a platform, or I have knowledge, I have materials that can help you purchase a home with a time machine, a mortgage rate that no longer exists. And so who doesn't have a buyer, right, that doesn't want to buy a home with a 2.5% mortgage? Like everybody on this call, everybody is listening to this podcast knows that there is buyers out there galore that want to buy homes with these low interest rate mortgages. Nobody really wants to take out a mortgage at 6.5% or 7%, right? Let's just face it. Nobody really wants to do that. But nobody knows how to buy a home with a 2.5% or 2.75% or 3% rate. That's where you come in. It is a very easy conversation to have with clients. So easy. You're not trying to convince them. You are educating them on something they really, really, really want to learn about. And that's what makes working with us and AssumeList so powerful, is because people want you to tell them about this. They are begging for you to call them and say, hey, there is an opportunity here. Let's see if we can find a home for you, right? And through that relationship, through that rapport building, contacting folks that you know of, maybe they're on the sidelines waiting for interest rates to drop, contact them. They may not have to wait for interest rates to drop. You may be able to find them a home today, right? And that's really what the power of this platform brings, is all the materials. We provide the training, the access to the platform, all the resources to help those clients along that journey. And some of them may not pursue an assumable mortgage after all, but you've demonstrated value. And through that value, they have decided, you are the agent for me. I want to work with you because you have taught me something or shared something with me that no other agent has done. And I can't tell you how many times that's happened to me, where I have had random people contact me through Google searches, or that, I would even through online lead generation, Zillow or Realtor.com, where you subscribe to zip codes, and they don't know me from Adam. They don't know anything about AssumeList or that I run Assumable search company, but they know through a 3 or 4 minute conversation that I have helped them understand a part of the real estate industry that was opaque to them 3 minutes earlier. And now they have said many cases, Mike, wow, I didn't even know this existed. Yes, I want to work with you whether I buy a home with an assumable mortgage or not. You seem to know something that other agents do not. So that is what we're talking about here. I encourage you to go to the AssumeList.com/LabCodeAgents website. There is a discount available for all LabCode agent members. It is only available to LabCode agent members. We do not discount our services ever. And you are welcome to sign up. There's no contracts. We definitely want to hear from you if you have any questions. If you want to know more about the training options, Nora holds weekly live training webinars. So there is ample opportunities to get your questions answered. We will handhold you along the way to get your level of knowledge up to where you feel comfortable and confident in your ability to have these conversations with both clients and the agents that you are across the table from. So thank you very much for your time. We appreciate it, and we look forward to seeing you on AssumeList.